Amazon earnings are after the bell. Our Josh Lipton is in San Francisco with more on what investors and analysts are expecting. Josh.
So, John, here is what the street expects from Amazon after the close today. Q3 EPS of $4.62 on revenue of $68.8 billion. Now, if that's right, that's a jump of 22% on the top line. Stock is up nearly 20% this year, but since Amazon last reported results back on July 25th, it's down about 10%, and that underperforms the S&P 500, which is basically flat over that same time period. Analysts do highlight a couple issues of potential concern. Yes, they say checks indicate healthy U.S. e-commerce spending trends throughout the quarter. But they also note that Amazon continues to invest a lot of money to reach one-day shipping goals. So how much does that weigh here on profit margins? Two, the growth rate for AWS, its cloud services unit, and increasing competition from big cloud rivals like Microsoft and Google. Baird's Colin Sebastian is looking for AWS revenue here of $9.1 billion, and that would be a jump of 37%. That's the same growth rate as last quarter. Microsoft just told us that Azure, its answer to AWS, jumped 59%. Remember, though, Microsoft doesn't disclose Azure revenue in dollar figures. Street is also very interested to hear more about the company's increasingly important online ad business, too. Last quarter, the so-called other category, which includes that business, jumped nearly 40%. Sebastian says that's a fast-growing, really profitable business, and there's growing optimism, he says, among Amazon investors that the company can take share from rival Google. Guys, back to you.
Josh, we talk about all the different places where Amazon is spending, and certainly they have so many different businesses to talk about. I mean, the streaming wars, how big could the content piece of the spending puzzle be?
Listen, it's a market everybody wants to compete in, obviously. So Amazon, Apple soon releasing its own streaming service, Disney too. Obviously, there's a lot of competition there. So we ask what that means for costs to secure that content. There's that many more players bidding on it, and frankly, is there a ceiling with that much more competition on how much you can charge as well, with Apple and Disney and others undercutting each other? Another thing to think about too is increasing government regulatory scrutiny, both here and abroad. I think if you talk to analysts, their concern isn't that Amazon's going to get broken up. Their more near-term concern is, what does that mean for innovation? What does that mean for acquisitions? How much distraction is that for the company? Maybe we'll hear about that on the call later today, too.